and let's start with the markets then. And American companies are more global than they ever were. Now, this comes even as Washington pushes on America First agenda and pours trillions into domestic AI infrastructure. New data shows that S&P 500 companies now generate roughly 42% of revenue from outside the United States, marking a new record. That beats the previous high of around 40% in 2015 and edges past the 39% mark hit during the dotcom bubble in 2000. But this is the paradox. The same period that saw a historic build-out of US-based AI data centers, chip fabs, and cloud infrastructure has also produced the deepest foreign revenue dependence on corporate America that has ever recorded. Technology is the biggest driver. Foreign markets now account for more than half of the sector's revenue. A separate FactSet style is that estimates put information technology's international exposure between 56% and 59%. That's the highest of any sector. Communication services, home to Meta, Alphabet, and Netflix, that has jumped to roughly 47% foreign revenue. That's up sharply from under 40% before the pandemic. Why does this matter? Well, it means that Wall Street's fortunes are now more tied to global growth, currency swings, and geopolitics than headline reshoring narratives suggest. In the December quarter last year, S&P 500 companies with majority international revenue posted blended revenue growth of nearly 12% versus under 8% for domestically focused firms. So, globally exposed American firms are outperforming, and this complicates tariff politics. Aggressive trade measures risk retaliation against the very firms that are driving index returns. Technology, media, and telecom firms now make up nearly half of the S&P 500's total market capitalization, and that is about 9 points above the dot-com peak, meaning index risk is now a function of both AI capex bets at home and consumer demand abroad. So the AI boom hasn't insulated American markets from the world, but it's made them more exposed to it.